Hey, what's going on, everyone? It's Mauricio over here at Global Takeover FX. Today I'm going to be doing a quick chart breakdown on the pair Euro USD. This is a pair that me and all of my students have been watching pretty closely, as well too as AUD USD. I posted that video a while back as well too, so let me know what you guys think on this one. I'm going to do a breakdown of where I see Euro USD headed and stuff like that. So as you guys can see right now, I'm on the daily chart. So each one of these candles took a day to form in all general. So now with that, as you can see here, what I already have marked up are these red lines. These red lines are my daily support and resistance lines, and they're based off of heavy indecision levels where the market has hit and had struggled to break through and stuff like that. As you can see right here in the bottom, how it struggled to break through that price right there as well too, and then finally gained the momentum. So all these levels are gained off of 3 key points that I look for in the market on the touch gap and overlap on how I draw my support and resistances and stuff like that. As you can see right here, we're at a major monthly key level. Reason being is because if I go to my monthly chart here, as you can see, that's a major indecision level from all the way from the 90s. Check that out. See, 90s, it had that zone again, late 90s. Early 2000s, mid 2000s right here, 06, 07 as well too. It's pretty close within this whole zone right here. And then right here back in 2017, that's just a major one that we're approaching. I mean, it's pretty much in there in that price from way back here. So that's why I have that marked up. Again, I'll mark up another one because I do see another heavy one. I want to say right. I'm going to say right about there would be another one, and I do have those just as white because again, they're major. That's a major indecision level in the market right there. So we'll go with that, and then make sure it's pretty thin there. Let's make sure it's monthly. Oh. Sorry, I like to have everything in all caps when I'm marking up my lines. I don't know why. It's just a little pet peeve I have, but bam, make sure that's on the left hand side. So 2 monthly key levels there, as you know, and then as you do, we can label another one right in here, which let's do that real quick. Actually, I'm just gonna clone this tool, and then we'll just move it down right about there, because as you can see, we were there, just a couple weeks ago, stuff like that. So that's all I look for. And then when on the monthly, especially today being August 1st, of course, the market is closed, but the last month, all of July, as you can see, all of July, we were bullish power. Very, very bullish as well, too. As well as a higher low was made right there on the monthly chart. So with that higher low being made, you do have somewhat of a head and shoulders pattern formed right here on the monthly chart. Again, I don't stay too long on the monthly chart. I'm just showing you guys everything that we're starting to form and we're starting to see. So as you can tell, there's your head and shoulders there. But that I just mark up those monthly key levels there, and then let's go down to the weekly chart. Let's see what's happening on the weekly. Oh, wait, real quick. Let's go back to the monthly. I'm sorry. One thing that I like to, again, everything comes in patterns. Everything is pattern oriented when it comes to the market. The way it moves, the way it's structured, everything like that. So every 2 years, Euro USD, AUD USD, the Australian dollar, they switch direction. They're in one specific direction for 2 years. So as you can see, look, from 2014 to all the way to pretty much 2016, right there, it was bearish. And then from 2016, 2017, until 2018, we were bullish. And then 2018 to 2020, we were bearish. So this is a good opportunity to use this tool. So we'll go there. Whoa, I've never used that tool before. I wanted to practice with it, some rectangle. Okay, well, I drew that wrong, so we'll just use this one. This one's a lot better. So there's that move. There's that move. And then there's this move here. 2018, 2020. So from 2020 to 2022, what do you guys think we can be seeing? I'm following the pattern. Look, so then 2012, 2014, boom. 2010, 2012. It's just every 2 years, guys. Look at that. It's all what happens on the left-hand side happens on the right-hand side is what I teach my guys. And honestly, it's just true in pattern. So for the next 2 years, we could probably see Euro USD go bullish, meaning the USD power is going to have a lot more power over the Euro. So therefore, let's break it down now. Let's go to the daily chart. The daily. What's going on in the daily? This is where we're going to see the most detail right now. As you can see on the daily, we were in that bearish trend. So if you see bearish trend, higher lows, or lower lows and lower highs were made, lower lows, lower highs, and then you had this huge spike up, and you thought it was the break of structure based off of right here. That break of structure was just a tested area because it fell down and it formed right here. Boom, 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 and it just kept on going. And then again, here's that little head and shoulders that we had form out, as well as just, you know, it found a serious level of support all within here. That's why it wasn't able to break that level to continue going down, because it's also, my red lines here are my daily support and resistance lines. These are where the daily chart found, you know, heavy levels of indecision, and then that's way, you know, it bounced off of there. As well as I have my daily trend line from there to there, because now we're bullish. As you can see though, what I'm going to go based off of right here, my break of structure. So higher high but lower low, lower high, boom, 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 and then just a heavy level of indecision all within this time zone here for, you know, April, since April till pretty much, you know, the end of May, we'll say. Let's change the color on that, and that's it's a little too dark. We'll say there. So that's going to be my structure point is going to be right here on the daily chart. That's going to be my break of structure right in there. We'll go red for that one. So there's my break of structure on my daily chart right here. As you guys can see, formed. So with my Fibonacci, now I pull out a new Fibonacci from my low point to my higher high point, which is going to be that point here. So we'll go low, bullish candle wick here. You know, so you can go a little bit to about right there. Boom. As you can see, closed perfectly right at the PRZ level of 38.2%. The wrong color. Let's go baby blue. Bam. Actually, I want that one to be a little bit darker. So right there at 38.2%. And then as you can see, take profit 1, 0% was hit. Take profit 2 was hit, negative 27. Take profit 3 was just hit, and that's where it closed at yesterday. So if you caught that move, congratulations. That was a great move to catch. 650 pip move overall, which is great. I mean, it did take a minute to do. Let's see how long exactly it took to do. I mean, it depends on when you entered, because again, it stayed in indecision for, you know, a few days before it finally moved up. So it gave you some really good entries to move up on and stuff like that. So let's see. Overall, it took 39 days, so about a month and a half. Not bad. So overall, like I said, every 2 years you have that big push, that big pullback, everything like that. So we just transitioned into the bullish market based off of this break of structure right here. And so look at that. We needed that heavy momentum push to go into the bullish market, which we just did. But now with every push, you do have a pullback. And as you can see, since we hit this monthly key level up here, pretty much in this zone, as well as it closed bearish engulfing right here. With this bearish engulfing right here, you can probably more expect a pullback. So this new Fibonacci tool becomes invalid, and we're going to draw up a new one, right, from down here at this level, and we'll go up to here. There's my point B right in there. And then, like I said, we can see it come down and retest this heavy indecision level, which I'm going to say it's going to be right up around 50% because of the fact on how this matches up with 50%, as well as with my trend line, as well as with this daily support and resistance, all within this zone right here. So I want to say anywhere from 38.2 to maybe 61.8 is where we can see it pull back to. But again, this is where we're going to have to follow it on smaller time frames now. This is where we take advantage of it to be able to take that opportunity. As you can see now, I'm on my 4-hour chart. I'm actually going to change the color of that because that's my, we'll change that to green because that's my, we're going to call that the money zone right there. Money zone. That's where we'll get the pullback to. You can write this little pullback down. Boom, take it on up. As well though, but look, if you see on the 4-hour chart, higher highs, higher lows are being formed. Higher low, higher high, higher low, higher high, higher low, higher high. Now, this right here is going to be my break of structure point off of my 4-hour chart. So it would have to break this. If it breaks this point down in here, then you can probably say, hey, it's going to come and retrace to this level of the money zone where I have it drawn up. If it doesn't and it respects it right there and it goes on up, then cool. But let's see. Look, bearish engulfing, bearish engulfing. So the bears are starting to take over power, but keep in mind, the bears are only going to take over power for maybe a week, 2 weeks, just until it gets into this level here. I mean, I see more or less just a week, honestly, gets in this level. We'll find a candlestick reverse pattern, take it on up for the long term. Now, the long term is going to be, you know, like I said, for the next 2 years. You can see it come up, and we're going to aim for this monthly target level up here. So that would be right after take profit 3. If it hits anywhere at this money zone, that's a nice move right there, you know. An overall 1,000 pip move. 1,000 pip move, you know, within the next week, within the next 2 weeks, month, whatever it may be, whatever it may take to get up there, that's a nice move. Because, again, like I said, we're overall bullish power right now. Bullish, bullish, bullish is where we're at. Now, let's see what's happening on the 1-hour chart. Let's see. So, again, we don't have a structure break on my 1-hour time frame just yet. So, same thing here. That's going to be my same structure point here on my 1-hour time frame, based off of my 4-hour time frame. So my 1-hour and 4-hour time frame have the same structure point, which correlates pretty good. I mean, so honestly, you can pull out a minor Fibonacci tool right here on the 1-hour chart and boom, go boom, boom, and just see if it breaks any of those levels. Now, if it respects any of these PRZs, the 78, the 88, any of those, right, where because it's currently at the 78, if it respects any of those, then it's probably not going to come down to this money zone down here where I have it listed to. Which, in all reality, remember, we don't like to predict what happens in the market. You just adapt to it, react to it, and adapt to it, and then boom, adapt and react. So if it rejects off of that, then overall I do know I'm bullish because of the pattern that formed on the daily chart. So overall I do know I'm bullish. I'm not looking for really sells too much. I can look for sells, but again, they're going to be short-term sells, not long-term sells. Because I'm going to be looking for long-term buys because now we're in the whole 2-year transition move to go on up for the next couple years. So let's just see what happens here, right there and there, boom, and then let's just see what's happening on the 30-minute time frame here. 30-minute time frame, that has the same structure point as well too on the 30-minute. So everything has the same structure point, guys. I mean, you do see lower lows and lower highs being made, minor ones, but they're not really. I wouldn't say those are really valid structure points for the bears. Again, because it's a trend within a trend. This is going to be my valid structure point right in this area, which is also at this daily key level right here too. So, I mean, in all honesty, let's go back to the 1-hour. We'll go to the line chart real quick. So let's mark up a trend line here on the 1-hour. We'll go point A, point off of point B there, on into the future. Looks good. Thin that up a little bit and let's go blue. Bam. Now again, if it breaks this support and this trend line here, you can know that it's going to be, you know, somewhat of a downtrending stuff. Then if it breaks this trend line, then you can say it's probably going to break this support and resistance, which then if it breaks the support and resistance, it's probably going to break that 100% mark, which then overall, if it breaks all 3 of those, you have a break of structure on your hour and your 4-hour time frame. So then therefore you have that break of structure on these smaller time frames to come and give you that main overall higher low off of your daily time frame. Remember, this is going to be the higher low that's presented off of this purple trend line that I have in here. So only if it breaks there, boom, boom, then you can expect that heavy retracement of the bears before you get that heavy bullish retracement push again. I'm sorry. So we see here, we'll see what's going on again. Boom, boom, every 30 minutes. So I'm going to mark up a minor 30-minute support, or well, it's actually on the hour. It's a little bit more clean. There we go. Pretty much currently where it's at. It's a minor support and resistance right in there. Bam. Bam. Let's go yellow. So we'll just see where it goes from here on out, and it's just kind of waiting on it. But overall, we're overall bullish based off of the daily time frame. Go back to candlesticks. There we go. So as you guys can see, we're overall bullish. So this is going to be my target area up here. So let's actually label that as monthly / new. Oh, I forgot to do the slash new target area. overall. So I want to say, let me delete these fibs. Let me clear it up a little bit for you. Let's go here. So overall, let's say if it breaks all these levels, like I said here, then like I said, you can see it come down and retest the 38.2 level or the 50 or the 61. And if it does, only if it breaks that, that's more or less where it's going to retrace to, because of these heavy indecision levels here. It's going to retest all of this because it had that huge momentum break. So it can come and retest this line right here, this first daily support and resistance, or it can come and retest there. So that's why I have that whole money zone. I mean, so honestly, the money zone can go from the money zone can go anywhere from this support and resistance line to that support and resistance line right in there. So if it goes anywhere from there, you could catch, a really good sell. Honestly, that's a really good sell opportunity too, 200 pips, 300 pips, whatever it may be. And then if you catch that 200, 300 pip move, catch the overall move up here to the new target area, which is past take profit number 3. I mean, man, that's an easy 1500 pip move right there, guys. That's, using a standard lot, 1500 pips is ridiculous. So you guys do the math on that, and yeah, we'll see you guys in the next video. Peace out. Have a good day. Just keep in mind, and let's see how this plays out, and we're going to find out within these next couple weeks.